Hi, welcome back to the channel. If you see me for the first time, my name is Wealth Trader, drummer and a mentor in the making, turning rhythm into energy and chart into profit, documenting purpose, passion, and self-mastery. So in this video today, I want to share with you how to use multi-time frame analysis to trade price action. Okay, so question I get a lot of time is this: they'll say, "What does this different time frame means? What is their use?" So today I'm just going to show you, very basic stuff that you can use to improve how you approach the market from a top-down analysis standpoint, which is the system I use, and it's very, very effective. Okay, so I'll just go ahead and enlarge the screen, and let's go. All right, so the screen has been enlarged. All right, so let me just do some illustration first. So when you talk about multi-time frame analysis, this is what you mean. You want to go from different time frames, looking for different things. You understand? And you're also looking for those things to align. All right. So for example, let's say a swing trader. A swing trader will want to look at the weekly for the overall sentiment, either bullish sentiment, bearish sentiment. Then he wants to come to the daily and spot his levels, structures, mark out what he's marking out. And then on the 4 hour, you also want to execute it on the 4 hour or on the 1 hour, right? So when it comes to the H4, he's waiting for those candles inside of the zone where he anticipated price to come, their reaction around that zone, price action, to confirm if those zone will actually hold, if the market is actually respecting those daily structure. Okay, that you marked out structure doesn't mean that the market will get there and turn around, or the market will get there and act as you expected. You are just anticipating mark price to get to that zone. When they come to that zone, all you want to pay attention to is the price action around those levels. So if you talk of the weekly time frame, or if you talk of swing trading, now first thing you need to understand is this: what kind of a trader are you? People will say they trade what is it called now, based on work. Maybe you are working or something like that. You don't have time. Well, it's true, but for me, what I discovered is that the journey is very personal. What I discovered is that what aligns with your personality. At the end of the day, it's your personality that matters. All right. So there are some people that are very, fast in executing. They are very sharp. They want quick, instant respond, like from the market. Is this trade going to work? Is it not going to work? They don't have patience holding trade. All right, so those people want to scalp, they want to day trade. And there are people that process information more slowly. They are deep thinkers. They want to take their time to reflect on what is going on in the market. So those people tend to use the higher time frame, which is swing trading. They tend to use the daily, 4-hour, weekly chart, to make sure they catch the move. And they don't like to do quick in and out because they don't really process information that fast based on decision. So what they want to do is they want to use the higher time frame so that they can take their time, place their trade, and go do all that stuff. So in that way, they are cutting themselves out of so much emotional decision, that could impact their trading negatively. So what you want to do when you first approach the market is you have to look at the higher time frame. For example, you want to look at the weekly. For possible sentiment, what is really going on. That's the work of the weekly for me as a swing trader. As a day trader, I advise you also look at the weekly just to get overall sentiment, where you are in the sentiment. So I want to go to the daily also, and what I'll be doing on the daily is marking my structures. Okay, because if I see one full weekly bar on the daily, I will see the structures that happen inside our weekly bar. Now, if you are approaching top-down analysis from using multiple time frames, okay, so what that means is that each of these time frames, the candle that open and close on each of these time frames, takes the whole of that time factor. So, for example, one candle on a weekly chart represents 5 days of trading from the daily perspective, okay. And from the 4 hour, 6 candle or 4 hour make 124-hour candle, which is 1 day. And a full 24 candles in 1 hour make 1 whole day. I don't know if you get it. So if I'm coming to the weekly, I will just see 1 weekly candle. But on the daily, that's 5. That's 5. You understand? That's 5 candles. I don't know if you understand. And if I come to the 4 hour, I think that would be like uh that's like about 26 or thereabout. I think so. I think it should be 26 or 28 thereabout. I'll check it. So that's how it is. Those are the information I want to see. So while I'm drifting down to a lower time frame, I'm seeing the structures that I want to see, and having at the back of my mind that I have a higher time frame sentiment. So what I want to do on the H4 also, which is the 4 hour candle, is for entry, or I use the H1, which is the 1 hour, the hourly candle for my entry. Now, why I love to use the hourly candle is that it gives me a quicker entry, like a sniper kind of entry, and it gives me tighter stop loss. So if I'm to use 40 to 50 pips after a 4 hour candle, I might end up using 20 pips or even 30 pips, and which gives me a more skewed risk to reward in that trade. Okay, so basically that's how it rolls. And if you talk of day trading, time frame, we talk of day trading time frame, these guys want to use the daily to spot their overall direction. Okay, they want to use the 4 hour for their setup, that is the H4 for their setup. Okay, and they want to use the H1 for their zones, and the 15 minutes for entry. This is the M15 for entry. So that is what a typical day trader will do. So this first box here is basically for direction for two different people. These are for structures for two different people, and these are entry. This H1 entry for a swing trader, even a day trader also, and a day trader uses this usually for entry, or even the 5 minutes. So there is no one size fits all in trading. Okay, so somebody else might see this and it doesn't align with how he or she trades. I mean, it's fine, but I'm just sharing with you what I've learned, what works for me, and how I approach the market. All right, so if you want to copy this, please feel free and go test it for yourself. So let me take you to the chart and I'll explain what I mean now. All right, so I'll take you to the chart. Let me explain what I mean. Okay, so for example, what do we have here now? Let's go to the weekly. Okay, so this is a weekly candle. Let's go ahead and circle it out. So let's say this is a weekly candle. This very candle here. This is a weekly candle, and you can see it's just one. We circled one, right? So let's go to the daily and see what happened. You can see the structure now. This is the bullish structure. This is 1, 2, 3, 4, 5. So this is 1, 2, 3, 4, 5. The bullish that we targeted. Alright. So now let's go to the 4 hour now. So as a swing trader now, I've seen a bullish sentiment from a previous week, which is just one of that candle. And now I'm on the daily to see this price action that happened here. Now I've seen that truly we're in a bullish condition, or a bullish sentiment. And now this is my daily confirming it for me. What I want to do next is I'll just head to my H4 and see more of those structures, and you can see. So you see, it's more clear for me now. It's more clear for me now. Okay, so look at this zone. This is an opportunity to go long. So it's that time frame are aligning. You can see the time frame from the weekly, the daily, they're all aligning, and you can see this good buy position from here. Okay, you can buy and you ride this wave up to here and you make very good money. So that's how it works. That's multiple time frame for you. So you just want to drift down from the higher time frame. You're coming down gradually to spot your entry and your target, so that you take advantage of the overall trend. All right. So that's how price action is being traded using multiple time frames. So different time frame will mean different things for you. Okay. So, and if you want to talk about the day trading, let's go ahead and let's take this one out so that it doesn't cause any form of confusion. So we go with daily. Let me go ahead and circle one of the daily for you. This time let's use a bearish one. All right. Okay. All right. Now we've circled that. So we'll go to the 4 hour, and you can see this is the drop right here, right? This is bearish, but now we can't see the whole of the structure to even take advantage of it. Okay. So now what I will do next now, as a day trader, I've seen that his daily bias is bearish and his bully 4 hour is showing bearish. So what you want to do is to take advantage of this trend, right? So now you just come to 1 hour to see that possible swing. Okay, and you can see how it played out here nicely. So it played out here very nicely. All right, it's playing out very nicely. Yeah, you see, and you just take advantage of this from here. So if you want to see the entry very well, you just go ahead to 15 minutes to see, look for that entry, and you can see the wave is very clear. The wave is very clear. At least at the break of this low here, or this candle with this pullback, you take this short position from here and possibly just ride to the downside. It's that simple, guys. It's that simple. It doesn't have to be complex, like I do say. That's one of the things I preach. It doesn't have to be complex. When you make your system very complex, you won't take trade, because you'll be looking for two different confirmations and you'll be missing out on your trade, which is more painful. See, it's better to trade your setup and take a loss than to miss a very good setup, because it will take another time for a new setup to come out. How do you know? Who told you that the next setup will be profitable? Who told you that you make money off of? How? It's not possible. This is probability too. So whenever you see your setup, take advantage. Forget about if you win or lose. You don't have control over the market. You just trade your edge and step aside. Okay, so I believe this video has been very impactful and helpful. I don't know, let me know in the comment section. Do subscribe, share, like, comment. That's your only two way to support the channel. And I'll have my WhatsApp group link in the description and my recommended broker. Please go ahead and engage, and I'll catch you in the next video, guys. Peace out, man, and do take care.